We need to talk about Cardano. For years, Cardano has been one of the biggest names in crypto, consistently ranking among the top cryptocurrencies by market capitalization. It recently grabbed headlines after being included in Trump's strategic crypto stockpile plan for the United States. At the same time, Cardano has been one of the worst performing top altcoins, both in terms of price action and on-chain activity. Some critics have even labeled Cardano a zombie chain.
There's a lot of projects in the top 100 that are irrelevant, that don't do anything.
Cardano has been up running since 2017. So we've not been down since 2017, which is extremely rare.
So what's the real story? Is Cardano a dead cryptocurrency, or is it an undervalued gem with massive potential? In this video, we'll break it all down. As usual, this video is for educational purposes only and doesn't represent financial advice. I'm Giovanni, let's get started. So let's start with some background. Cardano was created in 2015 by Charles Hoskinson, a co-founder of Ethereum. It is an open-source blockchain powered by a proof-of-stake consensus mechanism called Ouroboros. The project raised over $60 million through an initial coin offering in 2017. Cardano is governed by three key entities: the Cardano Foundation, a non-profit based in Switzerland; IOHK, an engineering company responsible for building and maintaining the Cardano blockchain; and the Morgo, which drives the commercial adoption of Cardano's technology. In 2021, the Alonso upgrade introduced smart contracts unlocking decentralized finance, NFTs, and decentralized applications on Cardano. ADA, Cardano's native currency, is used for fees, staking, and governance, and has a maximum supply of 45 billion. Cardano's roadmap is divided into 5 eras, and we are currently in the final one, Voltaire, which focuses on governance. The goal of this era is to decentralize the network's governance entirely, giving control to the community. Despite the crypto bull market we saw late last year, Cardano has arguably been one of the worst performers among the 10 largest cryptocurrencies. ADA's price is down by about 75% from the peak it reached during the previous cycle. Although, to be fair, many other top cryptocurrencies have also underperformed in this cycle. For a deeper dive into the reasons behind altcoin underperformance, check out our dedicated video in the description. Now, let's explore the key metrics behind Cardano's poor performance. One of the most important metrics for evaluating a blockchain's activity is TVL, or Total Value Locked. Cardano currently has just about $350 million in value locked on its blockchain. That is tiny compared to competitors such as Ethereum and even Solana. That's only 0.4% of the total value locked in DeFi. A low TVL means low liquidity, higher slippage, and a poorer trading experience. This is reflected in ADA's relatively low daily trading volume on decentralized exchanges. Now, you could argue that Cardano's DeFi functionality is still relatively new, having been introduced with the Alonso upgrade in 2021. However, newer chains like Sui, Aptos, and Ton have already surpassed Cardano in terms of daily active users. So why is DeFi activity on Cardano so low? One major factor is the lack of stablecoin activity. Only about 0.01% of the stablecoin market is running on Cardano. Stablecoins built on Cardano like USDA, JED, and IUSD are very small players. Major issuers like Paxos, Circle, and Tether haven't launched stablecoins on Cardano. Why is that? Well, probably because Cardano's DeFi ecosystem doesn't offer enough liquidity or DeFi activity to attract these players. Basically, it's a vicious circle. When it comes to decentralized applications, the situation is also not great. There are only 78 dApps built on Cardano, compared to about 600 on Base and 460 on Solana. Now, looking at all those metrics, it may be surprising that Cardano remains a top 10 cryptocurrency by market capitalization. How does Cardano maintain this high valuation? Well, it's likely due to a combination of factors. One is the Lindy effect. Blockchain systems with a long history like Cardano are more likely to endure as they have already proven their resilience. In contrast, newer projects often struggle to gain traction amid intense competition. Another factor may be the large amount of funds raised during Cardano's ICO, which provides strong financial backing for its development.
There's a lot of projects in the top 100 that are irrelevant, that don't do anything, and they raised really large treasuries in the ICO days. Absurdly large, and they really have no accountability because it was an ICO, right? So that can last you a really long time.
In the real world of finance, at some point, if you have a product that's not making any money, you'd have to take a down round, choke down an acquisition, go bankrupt. But these blockchains have just absolutely massive treasuries and low overhead that could go on forever.
That leads to the zombie chain question. Some people label Cardano as a zombie blockchain. That is a network with minimal developer activity, few active wallet addresses, little transaction demand, or a mix of all three, yet still maintaining massive valuations. However, Cardano doesn't fully meet the definition of a zombie chain. Despite low DeFi activity, Cardano continues to develop its blockchain with constant upgrades. While the community of developers is relatively small, it maintains a committed presence. Cardano has adopted a slow-paced approach, focusing mainly on decentralization and security. Its uptime has been far more reliable than other top blockchains.
Cardano has been up running since 2017, right? So we've not been down since 2017, which is extremely rare. When you look at the security architecture and how the smart contract works, you see they're more efficient, they're cheaper, and they're faster. And it actually allows us to work with a set of large institutions about how they take the experience from Ethereum and Solana and bring it on an enterprise-grade blockchain.
Essentially, Cardano's focus has not been on the DeFi space, but rather on real-world blockchain applications such as identity verification and supply chain tracking. It has secured partnerships with nation-states and large organizations such as the UN and NASA.
Cardano has been about how can you run nation-states, how can you enable 2 billion people who currently do not have access to financial services, does not have access to technical infrastructure and economic opportunities around the world. How do you get them on a global blockchain? And how do you get the people who sit in established countries like the US or Europe to be able to use them as clients? That will never give you the same amount of transaction as two bots trading against each other in an arb trading environment. Let's be quite clear about that.
The problem is that technological innovation on Cardano has yet to result in significant adoption and DeFi activity. Why is that important? Well, because high DeFi activity generates transaction fees, demand for the token, and hype, ultimately driving up the value of the cryptocurrency.
We have a centralized authority who has a centralized treasury, who does a lot of commercial ads for a token to go up. No, we don't have that. Do we have thousands of engineers and businesses who is using the blockchain for something who actually makes sense and can upgrade the world's social and financial systems? Yes, we do have that. Will that over time create a demand? Yes, it will certainly do.
You still have to cater to crypto native people. You still have to make them happy. You still have to market to them. You still have to speak their language. You still have to create a Web3 native community. Cardano has not done a good job of doing that. And the user metrics have suffered as a consequence.
And now the big question, should we be bullish on Cardano for 2025? Well, let's start by saying that macroeconomic conditions do not look great at the moment for crypto. But in case the situation changes, there are some catalysts that could work in Cardano's favor. Donald Trump recently included Cardano in a plan for a national crypto stockpile. If that happens, it could drive media attention as well as increase ADA's legitimacy in the eyes of investors.
If you actually have a reserve, you would like to wake up every single morning and knowing that the technology still works. Because in the end, if the technology doesn't work, the price of the asset will definitely plummet.
Moreover, Grayscale's filing for a Cardano ETF was recently acknowledged by the SEC, along with several others. The decision deadline is expected at the end of October, and Polymarket gives the odds of an approval in 2025 at over 60%. An ETF could potentially drive significant institutional demand, although, as we saw with the Ethereum ETF, that is not always the case. Finally, the Bitcoin OS bridge announced last October will soon connect Cardano to the Bitcoin DeFi ecosystem. That would make Cardano a sort of layer 2 for Bitcoin, potentially attracting liquidity and boosting its underperforming DeFi ecosystem. So, to wrap things up, it would be unfair to call Cardano a zombie chain, considering the active development happening on its network. Cardano is probably not a bet for those seeking the fastest growing horse in the race. Instead, it's a long-term investment for those who strongly believe in its technology. At the same time, if the US government moves forward with better crypto legislation and state adoption of ADA in some shape or form, that could generate significant momentum for the cryptocurrency. And now it's your turn. Are you bullish on Cardano for 2025? Let us know in the comments. Also, if you enjoyed the video, don't forget to like and subscribe. I'm Giovanni. See you next time.